Hi friends, in this video, that is admission of a partner part 3, I am going to explain about accumulated profits, goodwill meaning and the concept of goodwill at the time of admission of a new partner. I am also explaining how to prepare capital accounts, cash or bank account, new balance sheet at the time of admission of a new partner. This video includes even journal entries which we write in case of admission of a new partner. To explain all these points, I am taking one problem. See, this is a problem. Example 1. About this question, I explained in my other video, that is admission of a partner part 2. In that video, I explained about revaluation account also. First, you should watch that video. Then only you will understand present video. Part 1, part 2 of admission of a new partner. These two videos links I am giving in the description box of present video. First you watch those two videos, then only you will understand the present video. In part 2 of admission of a partner, I explained how to prepare revaluation account. But related to revaluation account, in journal we should write 3 entries. I didn't explain those 3 entries in part 2. In part 3, I am explaining the entries of revaluation account. Yes. We will write the journal entries now. For revaluation account, how to write the journal entries? We will see now. First, in revaluation account, debit side, we wrote all losses from here to here. So what happened here? Asset value decreased. Here also debtor asset value is decreased. Workman compensation liability value is increased. Loss. Creditors value is increased. Liability is increased. Loss. So assets value decreased and liability value increased. For these losses, let us write the entry now. In revaluation account, if you want to post them in debit side, then while writing the journal entry also, revaluation account is to be debited. Revaluation account debtor 2. Now credit side, all these accounts one by one you should write. To stock account, to provision for bad debt account, to workman compensation account, to creditors account. Now in credit amount column, all these amounts one by one we should write. Then stock is 3000 rupees. Then PBD, workman compensation, creditors. Then total 11,000 for revaluation account, debit side we should write. This is your first entry. What will be the narration? For what purpose we are writing here? While revaluating assets and liabilities, there is a loss. So to account for that loss, we are writing this entry. To record that loss, we are writing this entry. Therefore, the narration will be being the entry for the loss in revaluation of assets and liabilities. Then, second entry is for profit in revaluation of assets and liabilities. Once you see the credit side, building value is increased. land value is increased. These two are what? Assets. Similarly, investments value is increased. That is also an asset. So assets value is increased. There is an appreciation in asset value. Similarly, bills payable is a liability and liability value is decreased. So second entry is for what? For increase in assets value and decrease in liabilities value. If you want to post that entry in credit side of revaluation account, then while writing the journal entry also, credit side to revaluation account should be there. Then debit side what to write? All these words one by one we should debit. Therefore, buildings account debtor. Next, land account debtor. Bills payables account debtor. Investments account debtor. And outstanding expenses account debtor 1000 rupees. Now add them. Total will be 25,000 rupees. For revaluation account, write down that 25,000. Now, what is the narration here? Being the profit in revaluation of assets and liabilities. Then, last entry is for our answer. So, credit side total is more than the debit side total. There is a profit in revaluation of assets and liabilities. That profit we have to transfer to old partners' capital accounts. In which ratio? Old ratio. Which side we have to transfer that? Which side total is less? So debit side we wrote this. If you want to post like this, in journal entry also, revaluation account is to be in debit side. Then only we can post that in debit side. Revaluation account debtor. To which accounts you are transferring? To their capital accounts. Write down that. A capital account to B capital account. Now credit side two accounts are there now. Therefore first write down credit side amounts. Amounts are 5,600 and 8,400. In credit amount column write down these two. Now the total should be in debit column, 14,000 rupees. Narration. What happened here? In revaluation of assets and liabilities, there is a profit. That profit to old partners' capital accounts in old profit and loss ratio we are transferring. So that meaning should come in the narration. Then the narration is being the profit in revaluation of assets and liabilities is transferred to old partners' capital accounts in old profit and loss ratio. Sometimes what happens in revaluation of asset and liability, we may get some loss. Assume that credit side total is less than the debit side total. Say credit side, debit side, say debit side we got 25,000 total and credit side 11,000 total. Then the difference is not profit because debit side we wrote losses and credit side we wrote gains. Loss is more than the gain. Then the final answer is loss. We said we should transfer this credit side. So instead of transferring that amount to in debit side, credit side we should write by A capital account by B capital account. In old profit and loss ratio, we should transfer here. In that case, what will be the third entry? Reverse entry, no? Entry will be A capital account debtor, B capital account debtor to revaluation account, being the loss in revaluation of assets and liabilities is transferred to old partners capital accounts in old profit and loss ratio. Okay? And sometimes what happens, debit side total is 25,000 and credit side also we got exact amount 25,000. Means in revaluation of assets and liabilities, how much loss we got, equivalent to that we got profit also. Both are same. In this case, there is no balance carried down. There is no difference. Means what? In revaluation of assets and liabilities, there is no profit, no loss. In this case, two sides you should write the total and distribution is not required. Nothing is there to transfer to old partners capital accounts. In that case, for losses, first entry we should write. For profits, second entry. And for answer, you need not to write any entry. Okay? Because we are not transferring any amount. So in this way, revaluation account journal entries we should write. One should recollect our previous video class. What I said in admission of a partner part 2. While preparing accounts, we should write journal, then we should prepare revaluation account. Next step is we have to prepare capital accounts, cash or bank account, goodwill account. Finally, new balance sheet we can prepare. Revaluation account is completed. Then we are going to learn about capital accounts now. So while preparing capital accounts only, I will explain about accumulated profit and losses and goodwill concept. Start. Capital accounts looks like this. Actually, we should prepare separately. A capital account, separately we should prepare. B capital account, C capital account. Instead of maintaining three separate accounts, in one table, simultaneously we are preparing three accounts so that we can save a lot of time. Then, how to start this capital accounts? Once you see the question, old balance sheet. In old balance sheet, liability side, he has given capital amounts, no? Whose amounts he has given there? Old partners amounts, A and B. First, these capital amounts we should take in this account. We said we should take capital is a liability. Liability shows a credit balance. Therefore, credit side we should write this. With what we have to start? With buy. Because this is an account. What to write? We are bringing the balance, no? Therefore, write down balance brought down. Now, A's capital is 60,000 rupees. B's capital is 40,000 rupees. His capital is not given in the old balance sheet. Don't write anything for new partner. Then next what to write? Once you recollect our previous account, revaluation account. What is the third entry? In revaluation account, there is a profit, 14,000. That amount we have transferred to old partners capital accounts. A 5,600 and B 8,400. Now, since revaluation account is in debit side, in revaluation account, debit side we posted this entry. Not only that, in credit side, capital accounts are there. So when we are preparing capital account, same entry we should post. According to double entry principle, any entry one time in debit side of one account we should post, and second time credit side of another account we should post. Now in revaluation account, debit posting is completed. Then in capital accounts, credit side we should post. Why we are posting in credit side? Because we are preparing capital accounts at present, and these capital accounts are in credit side of this entry. So post in credit side. Credit side, what to write? Debit side account name we should write. By revaluation account. Amount is 5,600, 8,400. Then next, what to write? The old balance sheet liability side. General reserve, profit and loss account. These two amounts are given. These two amounts are known as accumulated profits. Accumulated profit means what? Observe. See, A and B are the partners. They did business. Assume that in 1 year they got a profit of 5 lakh rupees. Assume that they have taken full profit amount. If they take like that, then in future, if there is any unexpected expenditure, then how to meet it? What they do? Instead of taking total money from the business, they keep some amount in the firm only. For example, out of this 5 lakh rupees, they kept 2 lakh rupees in the firm. Only 3 lakh rupees they have taken it. Now, this 2 lakh rupee is known as accumulated profit. Accumulated means what? Undistributed. This 2 lakh is not yet distributed to the partners. It is nothing but savings money. If they keep that amount in profit and loss account only, then this 2 lakh is known as profit and loss account. With that name only, he gives the 2 lakh rupees in the question. Sometimes what happens, they may transfer this amount to one reserve. Then instead of giving P&L account, he gives general reserve. So P&L account or general reserve, these two are known as accumulated profits. If only A and B are there, then they can keep that amount in the firm only, no problem. So they started their business in 2000 year, and up to 31st March 2017, only A and B are there. Therefore, every year they can maintain that general reserve or P&L account like that. It appears in the liability side of balance sheet every year. But after this date, on 1st April 2017, what happened? C is coming as a new partner. If this amount is not taken by these two members now, then after this date, C also gets the right on this amount. Okay? It is not correct. This amount belongs to only AB. Therefore, at the time of admission of a new partner, if there is any accumulated profit, Who should take that amount? Old partners. In which ratio? In old profit and loss ratio. How to distribute this profit? What entry we should write? Let us see. See, revaluation profit entry. One should recollect that in revaluation account there is some profit. How we transfer that amount to old partners? By crediting their capital accounts. Okay? If you want to transfer revaluation profit, revaluation account debtor to old partners' capital accounts. Now, not the revaluation profit, we want to transfer general reserve account amount. Then, in the place of revaluation account, what we should write now? General reserve account. Why it is debited? One should see the question. In old balance sheet, which side is giving general reserve? Liability side. Any account is given in the liability side. What is the meaning of that? That account is showing a credit balance. If you want to cancel that account, we should debit it. Now there is one general reserve account. It is showing a credit balance. Now we want to cancel that by transferring that balance to old partners' capital accounts. That is why we are debiting general reserve. General reserve amount is 20,000 rupees. In which ratio we should transfer? In old profit and loss ratio. That is 2:3 now. 2/5, 3/5. Then 8,000 rupees, 12,000 rupees. Now how to post this entry in capital accounts? See, present account is capital account. In journal entry, capital accounts are credited. Therefore, credit side we should post. By what to write? Other side. Debit side account name we should write. That is general reserve account. In A column, 8,000 rupees. B column, 12,000 rupees. In the same way, see the old balance sheet, liability side, there is another accumulated profit, that is profit and loss account, 10,000 rupees. To transfer journal reserve, if this is an entry, to transfer P&L account, instead of journal reserve, we should write profit and loss account. How much is the amount? 10,000 rupees. Then how much it will be? Half, no? It will be 4,000, and to B we have to pay 6,000 rupees. Then capitals are in credit, therefore credit side by profit and loss account 4,000 rupees and 6,000 rupees. Assume that in balance sheet, profit and loss amount is given in the asset side. In present problem, we said he has given this amount liability side. Then we assumed it as accumulated profit. We transferred in this manner. Sometimes what happens, profit and loss account amount may be given in the asset side of old balance sheet. Then what is the meaning of that? In profit and loss account, there is some loss amount. Who should bear that loss? Only old partners. Means that much of amount from old partners' capital accounts we should reduce. If you want to add to their capitals, capitals are to be credited. If you want to deduct any amount from their capitals, then capital should be debited, no? Then reverse entry we should pass. What is the entry? A capital account debtor, B capital account debtor to profit and loss account. Here also in which ratio? Old profit and loss ratio only. Then we said it will be posted. Capitals are in debit. So debit side to profit and loss account 4,000 rupees, 6,000 rupees. So remember this point. If profit and loss account amount is given in the asset side, then debit old partners capital accounts and credit profit and loss account. If profit and loss account amount is given in the liability side, then reverse entry comes. Debit P&L account and credit old partners capital accounts. So P&L account, any side he may give, asset side or liability side. But general reserve, always he gives that in liability side only. Therefore, general reserve always we should write in credit side of capital accounts. Then, what is left? Right. Now come to an important adjustment, that is goodwill adjustment. Regarding that, what he is giving, observe in the question. Goodwill adjustment and capital amount related to that, he is giving adjustment A. C should bring 40,000 for capital and 20,000 for goodwill in cash. Goodwill is paid privately. Now what is this goodwill concept? Let us see. In general, goodwill means name and fame, reputation for any organization. Okay? For example, A and B, they started their business in 2000 year now. Now in 2018 year, for a new venture, they invested 10 lakh rupees. Their investment is 10 lakh rupees. And they got a profit of 50,000 rupees. In same year, X, Y, Z, this is one business firm. They started their business in same year. They invested 10 lakh rupees in the same venture. Can they earn same profit? Definitely not. Because A and B is an existing firm and it is already developed. Therefore, with 10 lakh rupees, they are able to earn 50,000 profit. But with the same investment, if any new organization starts their business, they cannot earn 50,000 rupees profit. Assume that in that year, this new firm is able to earn only 20,000 rupees profit. So how much extra profit A and B firm is earning? 30,000. This 30,000 profit is known as super profit. And we should not calculate goodwill for all types of firms. If any firm is able to earn super profits, only to that firm we should calculate goodwill. So this is goodwill concept. Goodwill means any firm, if they are able to earn super profits, then that firm is entitled to calculate goodwill. This goodwill is treated as an asset and it comes under intangible asset because we cannot see that goodwill, no? Reputation means you cannot see it, you cannot touch it. It is invisible in nature. So goodwill is an intangible asset and we should evaluate it. To calculate the value of goodwill, there are some methods. Why? Because, for example, firm purchased one machine by paying 50,000 rupees. Then valuation of machine is very simple. Machinery value is 50,000. But can you calculate the goodwill value in the same method? Difficult, no? Because goodwill means what? It is reputation. You cannot see. You can say that Tata company is a reputed company. But tell me the amount for that reputation. Little bit difficult to tell. So many points we should consider for calculating goodwill amount. Therefore, there are three methods to calculate goodwill value. One is average profit method. Then second one is super profit method. Third one is capitalization method. Regarding these three methods, in other video, I will explain. Now our topic is not how to calculate the goodwill. Our topic is goodwill is already calculated by using some method. Then how to treat that goodwill. Okay? In case of admission of a partner, how to treat the goodwill amount. That is our present topic. See this example. A and B are the old partners. They are sharing profit and losses in the ratio of 4:3. This is old profit and loss ratio. And they evaluated goodwill. Goodwill amount is 70,000 rupees. So every year, in an average, 70,000 profit is coming to them. Their business value is 70,000 rupees. Before C's admission, how they used to take that amount? A, in total goodwill 70,000, A's share is 4/7 is equal to 40,000 rupees. Similarly, B's share is 30,000 rupees. Before the admission, they used to get the amounts like this. Now, when C is admitted as a new partner, firm is giving 3/14th share to him. Then 3/14th of 70,000 belongs to C now. How much it will be? 15,000 rupees. Then in 70,000, 15,000 is taken by new partner. Then remaining amount belongs to old partners. Then how much A takes in that? See the new profit and loss ratio? 7:4:3. So 7/14 of 70,000 rupee belongs to A. Then it will be 35,000 rupees. Similarly, B, 70,000 into 4/14 is equal to 20,000 rupees. Once you observe, before the admission, A used to get 40,000 profit. But after the admission, A is getting only 35,000 rupees profit. Means what? A is sacrificing. A is sacrificing how much amount? 5,000 rupees. Similarly, B. Before the admission, B used to get 30,000 rupees. But after the admission, B is getting only 20,000 rupees profit. How much he sacrificed? 10,000 rupees. Now, these two amounts are taken by whom? New partner, C. C's old amount is nil and new profit is 15,000. Means he is gaining. C is gaining 15,000 rupees. 5,000 he is taking from A, 10,000 rupees he is taking from B. Now A and B are sacrificing 5,000 and 10,000. No? In which ratio they are sacrificing? That ratio is known as sacrificing ratio. See, I wrote sacrificing ratio is equal 1:2. How this 1:2 came? Let us calculate. How much amount is sacrificed by A? 5,000 rupees. B, 10,000 rupees. Find out the ratio for this. Therefore, sacrificing ratio is 1:2. Clear? Then, goodwill means what? When new partner is coming into the firm, old partners are sacrificing some part of their goodwill amounts towards new partner. Since old partners are sacrificing their profit shares, they want some compensation from new partner. That compensation amount is known as goodwill. It is also known as premium. So what happened? A and B are old partners. C is coming as a new partner. When C is coming, he is bringing capital. That capital is used in the business. It is not at all a benefit to old partners. Since old partners are losing some profit portion to new partner, then old partners demand some compensation from this new partner. That compensation amount is known as goodwill. So new partner brings goodwill into the business. How much goodwill he brings? See, in my example, total goodwill amount is 70,000 rupees. Will he bring that 70,000? No. In 70,000, how much amount is going to take? 70,000 into 3/14 is equal to 15,000 rupees, no? Only that 15,000 rupees he has to pay to these two members as a compensation. Then 15,000 rupees came to them. Then how they should take that amount? In which ratio they sacrificed their goodwill? In that ratio they should take that amount. Means in sacrificing ratio they should take. Then A takes 1/3 of this amount, that is 5,000 rupees. B takes 2/3 of this amount, that is 10,000 rupees. Okay? Right. Now, let us see the question once again. See this first adjustment. C should bring 40,000 for capital and 20,000 for goodwill in cash. Here, old partners are AB. New partner is coming into the firm. He is bringing capital. Amount is 40,000 rupees and goodwill 20,000 rupees. And continuation is, goodwill is paid privately. Privately means what? New partner is bringing goodwill amount and Old partners don't want to show that goodwill in the books. We should not record this goodwill in the books. That is called private adjustment. When this word is given privately, then we need not to write goodwill entry. Only for capital we should write the entry. And what is that entry? See. New partner is bringing capital. So cash is coming. Therefore, cash account is to be debited. Why we are debiting cash? Because cash comes under real account now. What is real account rule? Debit what comes in, credit what goes out. Since cash is coming into the business, we should debit it. And credit side, who is bringing that money? C, no? Therefore, C capital account. C is a giver. It is a personal account. Personal account rule, debit the receiver, credit the giver. Since he is a giver, we have to credit his account. Now how much capital he is bringing? 40,000 rupees. Then this entry we should post in capital accounts. Which side? Capital is in credit. Therefore credit side we should write by what to write? Other side account name. That is cash account. In whose column? C capital is in credit, no. Therefore write down the amount in C column. C. Not only capital, C is bringing goodwill also, but don't write goodwill here because it is a private adjustment, no. They don't want to record the goodwill in the books. Therefore, even though goodwill is coming, we should not record that in the entry. Then put the totals. 2 zeros, 6, 9, 17. Capital accounts, credit side totals are more than the debit side amounts. Therefore, we said balance carried down comes debit side. 2 balance carried down. Write on the same amounts. Then total becomes after preparing capital accounts, next account is cash account. In old balance sheet asset side, since cash is given, I am preparing cash account. And here also I wrote cash. What is the entry here? Cash account debtor to C capital. Why I debited cash? Because in old balance sheet asset side he has given cash balance. Sometimes he may give bank balance. In that case, we should write bank account debtor to C capital. Then we should write here bank and we should prepare bank account. Sometimes what happens, in old balance sheet he may give cash in hand and cash at bank. Means cash balance he is giving, bank balance also is giving. In that case what to do? Give preference to cash. Means write down cash account debtor to capital account. Then here buy cash and we should prepare cash account only. And in present problem he has given cash balance, no? Therefore this is the entry. I wrote cash. Then prepare cash account only. How to start this account? See the old balance sheet asset side. Cash. How much balance is given? 10,000 rupees. First you should take that amount. Which side? Once you recollect these capital accounts, in old balance sheet he has given capital amounts in liability side. We wrote them in credit side because liability shows a credit balance. Now cash balance I want to write. Cash is an asset. Asset shows a debit balance. Therefore debit side we should bring that amount. Debit side write down to balance brought down. Balance sheet amount is 10,000 rupees. After that, where cash transaction came in this question? New partner is bringing 40,000 rupees cash into the firm. And further, this is entry now. Amount is 40,000, 40,000. Now in capital account, credit side we posted this entry. And in cash account, since cash is in debit side we should post. Write down to other side account name. C capital account. Amount is 40,000 rupees. Now debit side total is more than the credit side. Put the total in debit column. Then balance carried down will be the same. Balance carried down is 50,000 rupees. Next, what we should prepare? Actually speaking, we should prepare goodwill account. But what is the goodwill treatment here? Privately paid. Means we don't want to record the goodwill in the books. That is why directly we should prepare new balance sheet. This is balance sheet. Observe the heading. Balance sheet of A, B and C. In question, he has given one balance sheet. For that balance sheet, what is the heading? Balance sheet of A and B. See the liability side of that question balance sheet. Only A, B capitals are there. Means it is called old balance sheet. Before the admission of new partner. Now, after the admission of new partner, according to new partnership agreement, we are preparing this balance sheet now. So this is called new balance sheet. You need not to write that word new balance sheet. How to indicate that this is new balance sheet? By including the new partner's name. And when you are preparing this, at the time of the admission of new partner. So 31st March 2017. Then how to prepare this balance sheet? Based on the old balance sheet, we should prepare new balance sheet. Means what? One by one, old balance sheet amounts you should observe. If there is any adjustment, by adjusting that, we should write the value here. If there is no adjustment, then same value as it is we should take. Cash 50,000 rupees. Which amount we should write here? We prepared cash account. In cash account balance carried down amount 50,000 we should write here. Then second asset is come to old balance sheet. Question. Debtors in inner column 40,000 minus provision for bad debts 2,000. But now debtors value in inner column write 40,000 minus provision for bad debts. See the adjustment clearly is giving that we should increase the provision for bad debt. Now new provision for bad debt amount is how much? In revaluation account we wrote 4,000 rupees. That amount we should deduct here. Then remaining amount is 36,000 rupees. Then stock. Related to stock, is there any adjustment? Yes, there is a depreciation. Therefore, stock. Write the balance sheet amount in inner column and 10% is the depreciation. No? Depreciation what we should do? Minus 3,000. In revaluation account, we calculated that amount. From that account, you should take that amount. 27,000 rupees. Then next one is furniture. Regarding furniture, is there any adjustment? No. In that case, write down the value as it is. Furniture amount is 40,000 rupees. Next, buildings. Adjustment is there. So amount in inner column 60,000 rupees. And what is giving? There is an appreciation on building 9,000 rupees. Depreciation we should deduct. Appreciations we should add plus appreciation. Then bills receivables. There is no adjustment. Therefore, same value as it is we should write. 12,000 rupees. Land. There is an appreciation. So take the value in inner column plus appreciation 5,000 rupees. In outer column 20,000 rupees. Next, all assets are completed. Come to balance sheet liability side. Bills payables. Is there any adjustment? Yes. 2,000 we need not to pay. So bills payables. In inner column 20,000 rupees. We need not to pay 2,000. Then what to write further? It is one type of rebate or discount. We can write discount. Supplier has given some discount to us. Then trade creditors. Yes, there is an adjustment. Creditors value in inner column 50,000 and adjustment is more 3,000 we have to pay. Means plus 3,000. Then what to write for this? This 3,000 is what? Additional creditors, no? Write down that word. Plus additional. Next, outstanding expenses. Since adjustment is given, write down the amount in inner column 5,000 rupees. And what is the adjustment? We need not to pay 1,000 rupee. Again same discount. In outer column 4,000. Then all balance sheet amounts are completed. Not only those amounts, once you have to verify the adjustments also. If there is any asset or liability is there in the adjustment, we should consider that amount also. Yeah, come to G point. There is an unrecorded liability in respect of workman compensation 3,000 rupees. It is not given in the old balance sheet, given in the adjustment. So this is one liability, no? So take in liability side. Workman compensation. Amount is 3,000 rupees. Then next, H. There is an unrecorded investments valued at 8,000 to be brought into books. Investments, asset. So asset side, we should take that amount. Then creditors outstanding. Yes. So balance sheet amounts and adjustment amounts, all we have taken. Then finally, write down the capital amounts here. In liability side, capitals. Now, 3 partners are there now. Then which amounts we should write? Will you write old balance sheet values? No. We prepared capital accounts. In capital accounts, see the answers. Balance carried down figures. Those 3 amounts we should take here. So 77,600, then 66,400, and C amount is 40,000. Once you observe, in liability side, I have not taken general reserve, profit and loss account amounts. In old balance sheet, he has given these 2 amounts. Why I am not taking them? Because these 2 amounts were already distributed to old partners now. In their capital accounts, we added those 2 amounts. And if you see these capital amount balances, those general reserve amounts, profit and loss amounts also included here. So if you write again, then the meaning is 2 times you are recording accumulated profits, which is not correct. So remember this point. In old balance sheet, if any accumulated profit is there, then since that amounts we are transferring to their capital accounts, since in capital accounts already we are writing those amounts, again in new balance sheet we should not show them. Then all amounts we have written here. Then finally we should calculate the totals. Then asset side also we should calculate the total. Finally, asset side and liability side, you should get the same total. Then only your problem is correct.